Okay, guys, welcome to Traders Therapy Session. I'm your host, like always, KRO. Today is the second lesson. Please make sure that you watch the first lesson so that you don't miss whatever the key ingredients that we'll be discussing here. Because from back there, from the previous video, I meant to say, I illustrated the game plan, in fact. So we'll move that way in that nature. Without wasting any time, I will try to keep the lesson videos as short as possible, but where there's a need for me to highlight something of importance, I'll do so. So without wasting any time, let's continue, guys. Today's focus is liquidity inside ICT's algo and time. Like I mentioned, guys, we have like three main sessions for the whole day that we can take part on. I agree there are other sessions that you can participate on, but trust me, you want to have a strong foundation of what you are doing. And I mentioned before that you still need to understand price, the whole of it. Then utilize what you know, utilize the behavior of a price on a certain period to use it on your ideal trading session as it will suit you. Okay, guys, now let's go for liquidity. Here I'm not going to go deep and explaining external liquidity, internal liquidity range, but I will highlight as we move on. So those are the things that you need to keep your mind focused on, because a lot of things will be said than being presented here. And guys, with that being said, let's continue. If you think that I'm not providing everything for you, I am not mentoring you. I'm just tutoring. I'm just showing you what I understand from ICT. Please get that right. I'm not mentoring you, and I'm tutoring you. And in most cases, like other blog and the likes, you will hear me not referring to it with a solid meaning of saying it's an order block, because order block has been changing ever since me getting it from other people until getting it from ICT, and it's still changing. And he's still saying that he will reveal, I mean to say, what an order block is, what a real order block is. But with the knowledge that we have, an understanding of an order block, I will explain what we have, but the main focus will be a fair value gap. So let's focus again. Our first point will be previous. We'll look at previous high and low. That will be the draw on liquidity. Above relative equal highs, that will be a liquidity. That's a buy side liquidity. And below relative equal lows, that will be your sell side liquidity. So we want to run for that liquidity. And remember, liquidity into our bus, it's a gas station. So you need to get into the bus that went to gas station. So that went for gas. So order block, our point of attraction, order block, that's where we'll get our entries, or that's where we'll get out of the bus, as well as the fair value gaps. The right order block and the right fair value gaps, they will lead us to the right destination. And after that, we'll deal with all related gaps and their theories. Now we talk about fair value gap. How do we utilize a fair value gap from higher time frame going to the lower time frame? How do we utilize a wick, especially the consequent encouragement of a wick, again, as we treat it as a gap? So how are we going to utilize such a volume imbalance, normal gap? Guys, I am not going in this training or in this model. I am not going to go to weekly opening gap. I'm not going to go to such. I'm not going to go that far, mainly because I want you to understand the basics, and I want you to grab the basics. I want you to grow, not to rush to things that are more advanced while you don't understand the basics. And I'm not denying you a chance to grow, but grow wisely, have a good foundation before you can grow. Without wasting any time, guys, I will play some drawings here. Okay, just allow me. So what is it that we are going to focus on? And will try to go after. I will sum up everything on a chart. I will summarize everything on a chart, but let me make a graphics before, because remember I said I want to accommodate all types of learners, and hence I'm talking like since I'm talking like this, I'm giving a value to others. So for you visual learners, let's do it. Auditory learners, I gave you, and the kinesthetic learners, for sure you are going to practice on your own and try to figure it out. And please do not rush. When I send you somewhere, just do that thing. If it takes a week doing that thing, take a week to do that thing. Then next week, let's come and do something more into that while you understand it fully, what is going on there. So previous high or previous low, either being previous session high, previous daily high, previous weekly high, previous monthly high. How do we identify a previous high? Let's just say, for example, you have a market trending upside. Upside like this. Guys, this right here, I am not also going to explain structure because I've explained structure then. Market was printing your higher highs, higher high. So where will the market likely to draw to? So it's either now the market will run for what? Market will run for high, because, or market will run for low. Why? Because here you will find traders buying from this side. As the market is moving higher, what do? They put their stop losses above here. Or some traders just got in here using a Fibonacci. They used the Fibonacci tool and they got the 61.2 or whatsoever. Then they used that Fibonacci. They got their entry stop loss below. So what will the algorithm do? And guys, today is not the discussion about the algorithm. We'll explain that. We'll elaborate that on charts. What will the algorithm do is that the algorithm will run for liquidity. And what is liquidity? The money that is banked here. A lot of money will be sitting here. Then the market, what will do? Then the price will run for liquidity. And after, you will see price rising further up. And that's where the retail traders get trapped. Sometimes the patterns will work. Sometimes you will wonder why the patterns don't work. So we dealt with liquidity. It ran what? Market will run for previous low or previous high. Depending. It doesn't matter your chart. Being a daily chart, if the market is running, it's a high here, it's a previous daily high. This will be a previous daily low. Let's say maybe you are on a 15-minute. This might be a previous session high. This might be a previous session low. We always want to run to liquidity. So we'll run to such things. Without wasting any time, let's get into the other one. Above relative equal highs, which will be the buy side liquidity, below the relative equal lows, which will be the sell side liquidity. Let's start with the buy side liquidity. You will find the market doing something like this. Okay, guys, sorry for that. Okay, allow me to remove this one. And let's deal with this as it is. So you will find, what is this to retail trading? 1, 2, it's double top. Traders, they took their trades here. They are going down. Some are even convinced that it's a triple top. It goes even further. Some will even think that this is just a channel, is just a rectangle, then it will break above, and it will break, I mean to say it's just a channel, then it will break below. or it will break above and go furthermore. However you think about this, while the algorithm doesn't go that way or doesn't think that way, and then you find out that such things happens to your trading, to your entry. You sold here, you went down, thinking it's a double top. Then the market comes back for your stops. Some, they think that this is a bull flag. Some, they will think that this is a bull flag. What the market will do? Market will break above and come to retest, and they will want to, as they see the little pullback that is going above here. Sorry. As they see this little pullback here, they will want to re-enter because of break and retest. I've used that rule. Trust me, guys. So what will happen is that above relative equal highs, this doesn't mean, guys, listen, it can be even be triple bottom. It can be even consolidation phase right here. Just right after that consolidation phase, then the market will blow down, will explode down. So the algorithm will run for relative equal highs, or the market can do this. This is one of the patterns that will come to realization. Or it will run for relative equal lows and continue going up. At this point, this is where everyone is losing. This is where everyone is blowing their account, because they thought that they were wrong, and then again, after breakout, then they will do what? They will want to buy, put the stop loss in the middle, and then they will expect the price to continue, leg move, pole leg move, and the like. Then it will break below. They will say this was the fake out, it was the manipulation. We were correct about the direction of the double top. This was the liquidity hunt, or whatsoever that they stop loss hunt, whatever that they call it. Then they will want to re-enter here, and then it will go against them. Then after losing your account, after losing 1, 2, 3 trades, you will start to have a distrust from the market. You will no longer trust. You will now experience FOMO and everything like that. But it's not about that. Let's focus. I hope everyone got what is happening here. Let's go to the next one. The next one, it will be an order block. Okay, let me redo that. Let's utilize this in our explanation. Let's start with the buy. Even though the market will be likely to take down the liquidity, like order block and fair value gap, it's what we use after the bars went to gas station. That's what we use. We want to, after the bars went to gas station, we want to find our bar stop here. Somewhere around here, we are going to find our bar stop. And our bar stop will be sitting in a form of, maybe let's just say, we had a price previously doing certain things like that. And guys, please, if you were thinking of structure the way that you were thinking about it, it's about to change. And there's no easy way to learn this rather than unlearn everything that you've learned and try to relearn this. You need to unlearn this and come back and learn the right way. Unlearn what you know and come back and learn the right way. It's just something that I got from one of the courses I've studied out there. Unlearn and relearn. Some of you, if you studied, you would know who I'm talking about. So when the liquidity is taken, guys, here's the important part. When after the liquidity is taken, remember, you expected to sell. And we'll talk about that. Don't worry. Just get the nitty-gritty of the algorithm. After the liquidity has been taken, what will happen? It will run somewhere. Even though people will say, that was the stop loss hunt, but they don't know what turned the price to reverse, what made the price to reverse from the certain area. And we don't talk about the zones and everything. We talk about the specific places now. This is how it's gonna get on this kind of a mentorship or tutorship you can call it, because I'm just explaining to you what I've learned there, and then I'm giving it to you in a way that I think it will make sense to you. When price after the break, let's just outline here. We said this was a buy side liquidity. Sorry. We said this was buy side liquidity right here. Remember, we are now integrating things now. Above relative equal high, we have a buy side liquidity above relative equal highs, right? And then either you can have an order block or a fair value gap. To me, what is an order block? An order block is an opposing candle. Get this right. To my understanding, an order block is an opposing candle to the direction where the move is going. Let's say here we're supposed to have what? We're supposed to have downward candles, right? But somehow, maybe we have 2 or 1 bullish candle right here. So if that candle, or maybe we can have it anyway, if that candle, and again, what makes it an order block, to my understanding, and to where it works, in most cases, you will find the right order blocks having fair value gaps with them. That is a high probability sign that that's the right order block. But sometimes, not every time, sometimes you will find price going after liquidity. Price going after liquidity, you will find that price reverse, because somewhere around here, let's change the colors. Somewhere around here, there was a bullish candle before the move that opposed the direction. So when the price is going to that kind of a candle, it can come either before the 10, and as if it can come in the middle. Please, we will discuss such in a class, because like I said, here is a two-tier sheep. I'm just want to open your eyes and see indeed that there is an algorithm, and it uses certain levels to 10 to use it as its pivot point. So you will find the order block either being here or being there, and then you will find the fair value gap. Then the price, that is a sensitive area for price to 10. Then you wonder why after that area, then you have an impulse move like this. Remember, this is the power of 3. You remember I quoted Andrew Tate's father quote there, and I said, what is it that you want to see? Let's put this in action. Manipulation, but accumulation. After price has been accumulated, it fools everyone's out, either being double top or either bring a breakout. After accumulation, we have a manipulation. You want to see a manipulation, because this is the code that I got. If you don't see the manipulation, you are the manipulation. So you either see the manipulation or you become the manipulation. So after accumulation, we'll have the manipulation, and the price will gravitate towards certain area during the manipulation phase. Then when you get your area, this will be your bus station, bus stop. Then when you get your bus stop, get into your bus. What are you going after? What is your target? What do you want to achieve if you get certain things? And excuse me for a little bit. I will talk about the fair value gap. Then we'll go to charts, illustrate, and try to close the video before it goes long. So, obviously, the price itself, it says above relative equal highs, there's buy side liquidity. But again, it says below relative equal lows, there will be what? Sell side liquidity. So obviously, this will be your target. But while as you are targeting the sell side liquidity, you want to check. Remember, we said some of the stop hunters will work into your favor. You will find that after me having to explain a fair value gap to you, you will find that as price is gravitating, there will be a fair value gap, there will be an order block right here. That can cause price to move further up. But let's try to get deep a little here. That will cause price to move up. And as price is busy moving up, that can take you out. Remember, if you get into a trade or if you get into a bus, we say you must use accumulated distance, because what are you saying? You are at the station, but you from somewhere. You have a distance, you are achieving your mysterious land. And your mysterious land, you want to get the buses until you get to your mysterious land. And your mysterious land is the land that you will never get to. So you want to utilize your accumulated distance and opposite distance to use it. If the bus can go against you, you want to get off the bus at that point. And remember that you paid price to take you to mysterious land. So that means you paid nothing. You have to wait for another bus, wait for another trade. But I mentioned again and said some of stop hunters, they will work into your favor. You will find out after having to see that fair value gap, you have an order block or another fair value gap. Those are the only things, guys, that will focus on: liquidity, fair value gap, order block. That's it. Then you have another one. As you go against your move, you'll have another one. Then that one might help you. Hence, I'm saying some are good and some are bad. This will be a bad stop hunter because it will go against you. But as you move, you will create it. Price is not always going to just move to your direction. It will create lower lows and lower highs, lower lows and lower highs. So you have to put that concept again into your mind, but in a way that you are using. Now you have to remember that you are using an algorithmic moves. Now the price will move to a certain areas as it gravitates towards your TP or wherever you want it to go. So basically, this is how the price will move. This is what I want you to trade. Of course, this can be reversed. You can take this, maybe let's say the liquidity is taken here. And the price is going maybe after this liquidity. This will be your external range liquidity. This where your internal liquidity. This will be your external liquidity. So it took out what? Long-term low right here. The one that you at least thought it was. Then after taking out this, you want to see a displacement. Those are the things, the patterns and everything. We'll talk about them. There are patterns that are being formed as price is doing this. We'll talk about those patterns. And no, it's not too much patterns, just few patterns there. You want to see price doing this and that. So around that, you want to see now the focus, remember, now the focus changed. We are going after the external. Maybe let's just say this. You want the price to go, let's put it even here. Because now we are going to incorporate the discount and premium levels. Guys, please listen here. This is just in passing. It will make sense as we talk about it more often. As you move with the price, as this impulse leg or your displacement leg, this will be a displacement. And ICT explains it better with a pool. If you put, you are using a kids swimming pool, the kids will split just a minimum water there out there. But if you put an elephant inside it, it will split a lot of water. So this was minimal waters, and this is a lot of water split out right here. This is what is happening. You want to check when you get into the trade, you need to negotiate, but it's not always, because this will only happen when you advance from here. It is not always. You want to measure the 50% of your displacement leg, and where will you get the right fair value gap, the right order block. they need to be below 50%, and will have a market structure shift, which I discussed, I call it market structure 3.0 from my course. Because we had a lower lows. If suddenly break of structure and the market is pulling to retest that and then to go further up. So guys, please, you will have to rewatch this video and follow the logic as we move. So you want to get it below the 50%. Below 50% is cheap. You don't want to get it above. Below 50% is cheap. Above is premium. Below is discount. And when you sell, you want to get it on premium, because at the discounted area, it will be expensive by then. That's the idea we are going to use here. Those will be on other related gaps and the likes. Guys, without wasting any time, I need to incorporate time with this, then close this, show maybe, go through few examples. Let's remind ourselves. We said we have London. We have London session. Which if you are in SA, you want to get into London Silver Bullet, by the way. London Silver Bullet, which will establish your entries and everything, ne? Around, sorry. Which will be around 10 a.m. to 11 a.m. RSA if you are in South Africa, and if you are in USA, you are using local New York time. Sorry for that, guys. We are going to use, that will be from 3 a.m. to 5 a.m. That will be New York time or Eastern Standard Time. And we have AM Silver Bullet. AM Silver Bullet, we are referring to New York time, guys. Name. Sorry for that. We are referring to New York Standard. We are referring to New York time because the algorithm runs using New York time. AM session, we have around, it will start around sorry, I'm disturbed. That one, AM session, if you are in South Africa, it will start if and then. Let me just mention 15:30, which is NYSE. 15:30, which is NYSE. It's for Forex, if you are trading Forex. But the Silver Bullet, I mean to say, I'm disturbed, guys. Sorry for that. This will be open for currency pairs. The Silver Bullet, your Silver Bullet will be from 17 hour up to 18 hour. That's where you will find your setups. Excuse me, guys. Being disturbed by the call right there. If you are in RSA. So this is PM. This is for the ones who are waking, the ones who goes to school. They can go to AM session. And AM session actually is when the market performs. And then you will want to see the market around PM session. PM Silver Bullet. PM Silver Bullet, if sorry, I didn't mention the if you are in USA there. That will start around 10 a.m. if you are in New York, up to 11 a.m. What I'm doing there, guys, I'm just subtracting 7 there because we are 7 hours ahead of them. PM session to us, it will be from 10 p.m. up to 11 last hour p.m. if you are in RSA. Then if you are in New York, it will be 2 p.m. 3 p.m. I think 3 p.m. which is 15 hour. It's not 3 p.m. It's 14 hour, 2 p.m. I'm just thinking of something in my mind, guys. Sorry. I'm just having a lot of algorithmic run here. So 2:15 to 3 p.m. I was just thinking of a last hour there. If you are in New York. So sorry for that. Let me just close this. So guys, this is, you want to take this time. If indeed, yes, you want to learn from this. Let me just get a better color here. Indeed, if you want to learn this, you need to consider the following. And here we'll only deal with silver bullet because it is not easy. It aligns, I guess, the algorithm very well because getting to know silver bullet or getting to understand silver bullet, although as we move on, we'll also talk about other things that are affecting the market. But besides that, without wasting any time, guys, let's see what we've been talking about, if it adds what we are saying. Please, I'll be using South African time, so my focus will be on 10 a.m. to 11 a.m. will be on 17 hour, which is 5 p.m. to 6 p.m. My focus will be on 10 p.m. to 11 p.m. But this is the time that you need. And if you are listening to me and you have your country, so this is for your practice. You can just add your country right here if it's not using this standard time. Just add it and put it there on the side. It won't take a long, you won't even take 2 weeks just to incorporate your time to New York time. Without wasting any time, allow me now to erase everything and let's attend to the market. What is it that we want to do? Let me just use 15-minute time frame. And guys, if you want to learn about time frames and everything, the basics, you just go to just go to my channel, I guess, and get that advanced course. Okay. The market I already know. I'll open. Let's not utilize Friday's market. And please don't forget to go and check that NFP trade which I did there. Where people are expecting to buy, although the buy left me, I expected to turn a little bit down. But while people were expecting to buy, I was selling. While people were expecting to sell, I was expecting to buy. So right there, well played right there. Let me see, 7 a.m. in South Africa. It means we are 7 hours advance, 7 hours ahead, I mean to say. So what does it mean? It means that the 7 a.m. will be 12 midnight open during New York. And please take note of the midnight open candles, né? And then after we have another one right here before the market close. This will be the last hour. This will be just before this. That will be the last hour. Okay, means that 5 minutes will also work for us. the better the lower time frame, because it will help us understand what we are talking about. Like I said, market just opened here, guys. When I get to London, let's just analyze whatever is happening here and see if it makes sense or not. When I get to London, this was yesterday's market. When it gets to London, and I explained, please follow that first video of introduction where I explained about the candle, what do you expect during the London, during the New York, the body and the like. During the London Open, when is our trading time? Our trading time, it's between our setup, formation for setup, it's between what? It's between 10. Where is 10? Here's 10 a.m. South African time, and it's London session, up to 11 a.m. South African time. Right there, what do you have? Most cases, 20 past 11, I'm aware of to give you a second entry going to 4 hours. But what do you have here? If I may ask, what do you have? And I said, what are the previous lows or previous high? I said previous session or whatsoever. You had a low. We are not going to go deep, guys, and with the buyers and everything. You will learn that as it goes. Price accumulated. What else do you have? You were manipulated. When are you manipulated? Before your trading time. So most of you will be fooled, want to enter the trade here as you see it moves. This is only a manipulation because the algorithm has not ran yet. But these are macros and everything. We are not learning about that. We are just learning about the silver bullet, London silver bullet, which is your time. Let's just try to outline it here with a dark line. So up to 11. This is where you have this zone. This is where you have your London silver bullet right here. Then what do you have? Let's talk. What do you have? You had this low. I know it will take time. You will try to. Please don't. As I will teach you the patterns, the nitty-gritty inside, you will then it will unfold. Now we are just interpreting whatever is it that we talked about there. What do you have? Accumulation, manipulation, and then what do you have? The distribution. What is the target? Liquidity here, stop loss here, stop loss here, stop loss here. After taking the stop losses, why did the price went down? What caused the price to go down? We talked about the fair value gap. Now it allow me now to talk about the fair value gap. A fair value gap, it's an imbalance between 3 consecutive candles. I will explain. Look at the price here. 1, 2, 3. There's a balance range. And as we call it a single hole that the bus can crash, look at here. How many holes do you have? If you are building, how many holes do you have here? You have 1, 2 holes. You see? Next to the candle, you have a hole. Next to the candle, you have a wall. A wick creates a wall. Next to this candle, you have a wall. But next to this candle, you have nothing. So 1, 2, 3 candles creates a fair value gap. This is the reason why the market went into it and shoots. So that will be a fair value gap, guys. 1, 2, 3 candles, the gap between 1, 2, 3 candles, this is your fair value gap. Because, let's utilize this. 1, 2, 3 candles, fair value gap. It's a gap between 3 candles. See here, wall, wall. See here, one single wall, 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 one single wall. It's a fair value gap. It's a fair value gap. It's a fair value gap. How to identify right fair value gaps? Remember, I said the opposing candle. This will be your order block. This will be your order block. This will be your order block. As you go, why would it be an order block? If price rejects it, and I will call it an order block after the reaction. Now it's a potential order block, as you may call it. So this is a fair value gap. 1, 2, 3 candles. The space in between is a fair value gap. 1, 2, 3 candles. The space in between is a fair value gap because ideally the market needs to balance. Market doesn't have to relieve the spaces like this. It needs to balance, as you can see right here. So guys, let's attack that London and see what happens. Three-phase move. Accumulation, manipulation. What do we have here? Sell side liquidity. Taken out. Break and retest. Let's sell. Take you out. This is manipulation. Accumulation. Three-phase move. Manipulation. After manipulation, what do we have? And manipulation will go here. And after manipulation, what do you have? Distribution. Then it's a three-phase move. Accumulation, manipulation, then you have your distribution. It will not always seem like this, guys. You have to train your eye just to see it. After you wait for your time. What time? 10 to 11 for setup to be formed. You have this displacement. You have identified the move already. You have this displacement. You have one fair value gap. You don't have a fair value gap here. You have one fair value gap. You have two fair value gaps. And always this, you will hear me saying, you will hear me talking about this throughout. You had a fair value gap here. I wanted to mention this one first. You have a fair value gap here. You have a fair value gap here. Depending on your strategy, you will miss trades. So this is how you're going to protect yourself. After price taking the, and then you can see a displacement here. After price taking market, after you've seen a market structure shift, or whatever you call it, you need to see fair value gap after the displacement. And then if you have two fair value gaps like this, you need to utilize the first one and accommodate the second one. Your stop loss needs to be at least below. It needs to be at least below 50% of this. You will see me participating in this trade, but I managed to get, and let's look at time here. It's when it started. Yes, I saw this here and I thought it was early, but it was time though. Then I waited for re-entry. You will see me seeing another fair value gap being formed around here because I have established the move and it's my time to trade, right? Then somewhere around then I went out. You will see with the execution me trying to get into another trade right here. Let me. Oh, it's not this one, but the same thing. It was during the New York session. But same scenario, being left with first early entry, then got the second entry. Because I guess I was left with this entry right here. Guys, then look at this time. From this time to 11. Where's your 11? Your 11, it's here. You got into your entry. Where will your stop loss be? 1, 2, 3 candles. Your stop loss can be below this candle, can be below that candle. It is safe to be below this candle because remember you missed the trade and then you will see me performing. Is the reason why I thought this was yesterday's trade, because you will see me on my real account, the very same account that I'm using for YouTube. You will see me doing what? You will see me putting the stop loss somewhere below here because of I was trying somewhere here because of I was trying to accommodate, and that video is posted already. It's there on YouTube, I think. But not on this series, only on market review and everything like that. Check the latest video, then you will see me doing that. So guys, it will move. This is what you need to identify. Without me talking too much, this is what you need to identify. You need to identify this area manipulation during your time, which it was at exact time, but sometimes it will stretch even after 11. It will stretch even after 11, then you will get your move. Then this is what you're going to get. And tell me, guys, tell me if you don't want to learn how to catch this kind of a moves. You can see all my participation. I only participate in these types of moves because whether it's a loss or a win, but because you see the participation, you can see yesterday's participation. And you can see when I went out here, though this was on 1 minute. So you can see the precision there. It was accumulated, then it took out the liquidity. What time was it? Remember the time I talked about? 5 to 6. Am I within the scope of time? Yes. Did I notice this? Yes. But this was a two-way trade. You will see me. This is the reason why I went out here. In fact, I was supposed to get my entry here because I was supposed to get my entry here going down. First thing, liquidity sweep. I saw a displacement. I tried to catch it. Then I got it. Then my target, my aim was this fair value gap right here. Then after, what do I notice? I talked about it when I was demonstrating there. Sometimes it likes to do this. It will take here. It will take above. So you can lose everywhere. Then after taking above, you can see market came in. You see before 6, 10 to 5 right there. That was a macro running. And then fair value gap. I'm no longer going back there, guys. I'm trying to keep this thing short. But please, you can replay and just try to get the logic, what I'm trying to give you here. And then the price went into a fair value gap. There was one fair value gap. There's a second fair value gap. There's a third fair value gap. Then where will your stop loss be? Oh, there's this third fair value gap. Where will your stop loss be? You're going short. Please, you will want to check first whether your price, it is at the discounted area. Some people will take this from here and try to check the discount, but this was affected by this move, hence I'm calling this an order block. So high to low, this was a discounted area, discounted fair value gap. Why I wouldn't go for this fair value gap? Why I wouldn't even go for this one? I would go for this, just entry here, and then stop loss above or even above there. But trying to check the price to respect the order block, the right order block will be the one that will be respected. Then we go short. Hypothetically speaking, following the algorithm, you got your entry there. Where are you going for? Next liquidity, external range liquidity, because you are dealing with an internal liquidity and you are done with it. So, like I explained, the next area of liquidity, you go there. Do you want to go low? I don't know. You'll hit your stop loss. After getting the liquidity, guys, where would you want to go? What time is it? Let me just explain this and move forward. After taking out the liquidity, where would you want to go? Next area of liquidity, which is it? We took out this. This was the next one. We took out this one with this. Then we came to take this. Then we came out for this. As you can see, eventually we came out for that going forward. So it's all about area of liquidity. So I covered silver bullet there. There was your 5 a.m. silver bullet. This was early. There was your AM, I mean to say silver bullet. There was your silver bullet, accumulation, manipulation. This was a displacement. Displacement better than this one. This was a displacement. You retrace. Retracement of the displacement. It must be, and it was not discounted, below 50%, which is at the premium. You want to sell at the premium. Then this takes us to not any other session. These are all sessions, guys, but not any other session. Let's go to the last hour, the silver bullet PM session. Here it is. From 2 p.m. to 3 p.m. Where's your 2 p.m.? Which is 9 p.m. South African time. Where's your 2 p.m.? 9, that's around here. 2 p.m. to where? This is where you're supposed to get your established. Let's see. This is where you're supposed to get your entry. Using that, what do you have? From 2 p.m. everywhere. Can you see this? Relative equal lows. Guys, there are other things that you will use to do this and to find out this about this. And you have your daily bias, you have your directional move, you have your order flow with you. Then after this, what happens? accumulation, manipulation. Where does it manipulate? Guys, please take this into consideration. To this fair value gap, it just wants to go lower, but look how it respected the fair value gap. So you will go with time frame correlation and you will see what is happening. Then after fair value gap, what happens? The price went higher. For what? Buy side liquidity. Now we're going externally now. We're going in hard. You go to a higher time frame and it will show you why it went there. So guys, everything else that I've shown you right now, it's basically what we'll try to get understanding from while using ICT logic here. Please guys, let me see you on the next video. And then don't forget to check the video that I've posted below before this one. I guess it was yesterday, but like I mentioned, it won't be on this side. And let me catch you on the next video. Please, I want you now to do this. Take a week. Now you're going to go to your trading view. And well, this is a free platform. Or you can just pay a minimum fee just to get the feel of replay button. But I will use it as I interpret, but it doesn't give a feel of a live market. I rather record, like I've recorded those two videos, NFP and the yesterday's video. I rather record and watch the market, have a feeling of what the market is doing, because it's a two-step way. If you replay like this, you won't get the feeling, but it's as far as they can get. It will be better, at least maybe the replay is better. You see, as you get the next feel, or even if, oh wow, that 10 type, guys, I'm not going to go back on this one. You see, it's even doing what to me. I'm not going to go back, but all you have to do, just go into your trading view and open 5 minutes, I think. For now, for a practice, open 5 minutes, zoom it in a way that is going to be, and create a space in your screen, please. Zoom it in a way that is going to fill, the whole day is going to be filled in your screen. I think like this. Zoom it like this. And it will help better if you are a visual learner. Okay, you'll zoom it like this and zoom it like this. Look at those different times and look what the market is doing during those times. There are other times when the market is moving hard, but I don't want you to focus on that. And as we move on, I will show you why I'm not even focusing on them, because we need to use this move right here to get to this entry right there. So they always worked with each other. We need like this thing. We needed this move right here just to get to this trade. So everything we need to use we use something that we got previous to use it to the current market or upcoming market. So that's what we use, because algorithm will remember those levels, algorithm will remember those codes. So guys, let me find you on the next video. All you have to do, just go watch how these moves move, and then when. Check the fair value gap. Check what I talked about. The candle that is opposing the move, that will be your order block. At this point, this will have to be your order block. 1, 2 candles, there will be your order block. You will get into them. And then after getting into them, then you'll have another one. Without wasting any time, guys, let me see you into it.